is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day from the technical charts and then try to plan for a better trading opportunity for the next day. That's December 6th, Wednesday 2023. So we had a continuation of the rally without any pause today. And the bank nifty seems to be on steroids. Easily took away 47,000 and more. And let's get to the charts. Here's a wrap up, but we'll come back here after we look at the charts. So here we go. Let's look at Nifty first. And we have another gap up and a hammer, green hammer on the top. Right? And that's the third gap up that's there, right? A gap up at 2153, a gap up at 2300, another gap up from top of yesterday. That's at 2700, and you have a new all-time high on Nifty, right? If you look at the extension of the Fibonacci extension that is used to project the levels on the upside, right? That shows that it has hit the 61.8. Anything, either on the upside or downside on the Fibonacci, if it breaches the 61, it's going to be a real big breakout. Downside, real big breakdown. So this 61 hit, and now here is few inches away from that. Actually, 51 is 2900, that level. So almost there. So if it takes out that, it's going to be big breakout that could easily take it to 21k, and maybe the next targets could come in at as high as 21,500. Right? That's what and it's also on the top of a channel that is shifted slightly, new channel that is drawn, and it can be shifted if the price moves on there, but as of now it's on the top of the channel. So slight cautious. There is a confluence of the 61 Fibonacci extension as well as the channel top, so slightly time for some consolidation or some profit booking could come in there. But the immediate resistance would be the all-time high of 28,700 first, and then 40 and then 21k would be the next resistance, and then 21 300 400 500 likewise rounding numbers. That's the resistance upside. Downside, the first support would come in at 2700, which has got a gap now. After that you would have 2300, which has got another gap support, and then after that you have the 20,000 support, and then 9900 that has got another gap support. That's Nifty and Bank. So extreme bullishness, clear breakout with gap ups, extreme bullishness. And look at the Bank Nifty charts. It's the second gap up that is there. First gap up will give a support of 44,900. So that's almost like 45k would have a gap as well as a Fibonacci supports of 23. So that will be one support, and then above that you have the support at 46,500, which is another gap. So that support, and that 46,000 rounding number can come in as support, and then so those are the supports. Look, 46,500, 46,000, 45,000, and that's all the supports for Bank to the downside. Upside, you can see that there's a channel that is formed, and it can go as high as 47, 800, 900. That's all. So the first resistance would be to take out of the 47,250. That's the all-time high that was created to take out that. That's the first resistance. Then 47,500, and then 47,700, 800. That's all. That will make it to the top of the channel. So Fibonacci extension of 61.8 is breached here, and any moves from here would be explosive, really big, and it can easily take it to as high as 48,200, which is Fibonacci 78. So it can go outside that. So this new channel that is formed can be shifted, maybe shifted it moves to that, but Fibonacci 78 is an easy target of 48 if today's high is breached for the Bank Nifty. That's the levels there for Nifty and the Bank Nifty. Now just quickly, so non-stop rally, a rally without a pause. Some people expect when such big moves of 1,600 points on Bank Nifty a single day and 400 plus points on Nifty on a single day. When that happens the next day or the next few days, may consolidation or profit bookings or all this could be what people may expect. But contrary to that, it is non-stop without pause. Another nearly 1% of move and 1.5% of move is what I saw in Nifty in the Bank today. 581 points of move after 1,650 points of up move the previous day. That makes it 2,400 points in just 2 trading days with multiple gap ups, right? So another thing that we have to make a notice: Nifty has now formed a gap on the top, a spinning top. Spinning top on the top is slightly dangerous. That could mean that there could be a potential for retracement that can come in there. And the top of the rally, so spinning top is indecisive with volumes and small body with the wicks on both sides. That's on the Bank Nifty, and it has formed a hammer. A hammer on the top will confirm there is some retracement that could come in. On the top, it is dangerous. So if it breaches the low of the hammer's candle, then it is confirmed, and then it's not confirmed. So slightly cautious with respect to the price patterns there. Bullishness is there, extreme everything, but price patterns on the top. After such extreme breakouts, you could expect that there is some consolidation, profit booking, pause can come in. But as of now, today's move was without any pause, observed 581 points on Bank Nifty, and then nearly 168 points on Bank Nifty, both making new all-time highs. Right, intraday it was range bound mostly after the up move. There was some resistance that was there, but it never wanted to give what it had gained in the gap up. So yesterday all the same thing happened, right? It was a gap up, absolutely sealed, and there's no question of going below that, and then further up move. Today that further up move did not move much because it was range bound after the gap up. Most of the gains were coming in the gap up itself. Now Fyers are buying big. The DAs are buying even more big as of yesterday. Today's data is not coming, but I would assume that Fyers are buying more today as well. So look at this, data is coming. It's 5,000 crores of buying in the cash market again, right? But there is some profit booking from the domestic institution side, 1,400 crores of selling as well. So institutional participation is absolutely supportive, and that's the reason why market is moving also. Usually December month, after the 15th of December, there will be very few activity, and that's it. So people are going to holidays. Before that, they're buying and then going, right? So expect this continuation till the mid of this December. After that, you may see some consolidation. That's what is exactly happening. So resistance we are already seeing 2870 all-time high first resistance by Nifty, 2900 Fibonacci 61, 21k resistance. After that, support is 2700. Downside is a gap support. 2500 is a rounding number support. 2300 is another gap support. 20k is a big rounding number support, and 19990 is another support. It's a gap support. For Bank Nifty, 47,225 all-time high taking is first resistance, then 47,700, and 48k is a rounding number. 48,250, Fibonacci 78 is resistance on the upside. Support coming with some lengths 47k, 46,500 gap support, and 45k is a rounding number and a gap support. Momentum is bullish absolutely on short term. Daily charts are showing bullishness. Momentum in the bull zones, RSI is about 60 on both, and the trend indicator ADX also is showing absolute rising in the bull zones. DMI positive. India VIX is causing divergence once again. It is spiked another 3.6%. So total it has spiked more than 18% of something. 18, 19, 20% of spike when the market has moved up 5%. This is divergence. Market, it should have cooled off, but it's spiking up. Another reason for the top. That spike, it should have cooled at least today after the event is over, but that's not what's happening. So we have to be cautious on that factor also. So the candlestick patterns and the VIX is something to be cautious, giving us clear clue that there is some pause that will happen in the coming days anytime. But it was expected today, it didn't happen. Bollinger Bands absolute bullish, upside expansion on the Bollinger Bands indicate for further up move. Walking on the bands is extreme bullishness. That's what it's showing the patterns. Technically charts are extreme bullish, with no all-time highs, and we don't know where it will stop. It is non-stop. It can go to any level. There are no boundaries. So it's in an unknown territory. Right? Across sectors today, there was some bit of red that I've seen in the IT, and otherwise, if I except the IT and the FMCG, others are all cross green. There the bullish momentum all except IT slipped in the sideways slightly on the short term. But momentum is in the major sector leaders, and all the heavyweights are almost all green. They're all in the bullish momentum except INFI. You know, Hedging Bank made another 2% move after yesterday's another clear bullish momentum outside in the ICICI Bank, big buying about 1,000. Now, US markets, US indices are showing some run on the top, some profit booking on the top of the rally. Dollar has spiked, rupee remains weak. Crude has crashed. Gold also is slightly facing resistance on the top after making all-time high yesterday. So, overall, big cues there on the global side. This is opportunity for it to do a momentum investing, not value investing, because we'll have to wait for the dips for that. As a trader, the direction is very clear, absolute bullish, but you have to be cautious, betting blind when such big moves are happened. So there could be profit booking post consolidation that can be expected, especially at the end of the December month. So you have to be cautious about that fact. Directional traders, direction is clear, but directional trading has some indications of some pause that could come in soon. So that's what. Right. Otherwise, shift to directional strategies when the momentum is in the RSI above 60 zones. Don't go in non-direction unless you know what you're doing on the upside. Right. So that's what I have. Subscribe if you're not subscribed, and share to friends and colleagues. And also subscribe to Twitter channels where we have regularly post the technical analysis charts. Right. So that's all I have for tomorrow. Happy trading. Manage your risk and stay safe. Protect your capital. That's all you can do. And VIX is spiking up. You have to be slightly cautious. We are on the top of after a big move. Be careful about that. But market direction is very clear. That's all. Thanks. Happy trading. Happy learning. Happy investing. Bye bye.